This is going to become a debate about revenue growth. So revenue growth is decelerating at Amazon. The rate at which it decelerates going forward, the number one debate I had with clients through the evening was, what is 2019 revenue growth going to be? And we've seen this happen before in tech. When you go from hyper growth to more modest growth, but profits kick in, there's a little bit of a transition that happens as you move from sort of being trading on revenue multiples to trading on EBITDA and EBIT multiples. So you're seeing big profit beats. You'll be seeing a little bit of slowdown in revenue. That has to be digested by the market, but nothing really has changed for the long term for Amazon. All the drivers for growth are still there. It's just a well-owned stock with a little bit of a negative surprise on the revenue side.
So why this huge, you sound like you think it's been overdone, or did you think it was overdone to get to the heights that it had reached?
Well, look, our price target has been in sort of the 2,000 to 2,150 range for most of the last 6 months. So when it got to 2,000 and everyone was talking about $1 trillion market cap, the risk reward was getting a little bit worse on the name. Now it's 1,600 plus or minus in the pre-market this morning. So clearly the risk reward's now better. At the end of the day, if you looked at the changes we made in numbers overnight, my revenue came down by 1-2%. My profit came up by 20. So again, this transition's going on. People have to get used to maybe a high teens revenue growth number instead of a 20% plus revenue growth number for Amazon, and looking a little bit further down the P&L. You know, to Joe's point in the lead-in, that's not what people have gotten used to doing with tech over most of the last 10 years.
Especially with a company like Amazon, where they traditionally have not liked profits. They wanted to grow the top line at the expense of that, and I think if you're an investor, that was the thesis you bought into. Now it's reversed. So if you're buying Amazon now, what are you looking for? Are you buying into the profit center, or are you looking for when is that revenue growth going to come back to the way that it used to be?
Well, I think there's two factors here. One, the core e-commerce business is pretty massive at this point. I mean, you're going to slow down from the law of large numbers. You know, the first party Amazon business grew 11%. It's been decelerating a little bit every quarter throughout this year, but you have businesses like AWS and advertising that are surprising to the upside on growth, also at higher profit margins, and they're contributing more gross profit dollars. So you have faster growing, more profitable businesses as its low profit business actually starts to slow. So investors just need to re-educate themselves about that dynamic and understand what they're paying. But if you look out 2 years from now, you're paying something like a mid-teens EBITDA multiple for Amazon, which could possibly compound EBITDA 30% plus over the next couple of years.
To Ed's point, do you think that investors need to actually get some kind of reassurance from the company itself that it is in the mode of realizing and harvesting profits and cash flow at this point?
No, it's a great point. I think understanding the cadence of how we're going to move to slower revenue growth, and not waking up one quarter and finding out there's no profits because they decided to accelerate something. We've certainly seen over 20 years of Amazon periods of time where they harvest profits and then they pull that back. If they were to pull profits back at a time of slower growth, certainly that would be a material negative shock. That's really the risk people are trying to price into the market right now.
You'd see that as a buying opportunity, it sounds like.
I would. Look, they are the leader in cloud computing. They are the fastest growing bit of digital advertising in the market right now, and taking some share from some of the other players. It's still a very large, fast growing global e-commerce company. Not a lot of the long-term drivers changed last night. This transition is just being what's absorbed by the market.
We've heard anecdotal evidence of CEOs who say, look, there's not a boardroom in America that doesn't talk about Amazon and how they might get cannibalized by Amazon at some point. Where are they on their march towards world domination?
Well, you think about some of the areas where they're investing to grow. It's cloud computing. That's disrupting IT services. Amazon Prime Now, Whole Foods, that's disrupting food.
Those are the ones we know about. What about when they start getting into insurance and other things that we hadn't even thought about?
Healthcare and financial services are the two biggest areas that clients talk about. Little to no information yet from Amazon on that looking out, but those are obviously very large addressable markets that have not been as disrupted maybe by a company like Amazon's scale and scope.
Which leads to the next point. Is there ever a threat of regulatory oversight on Amazon, saying they've just gotten too big?
What we've said on regulatory with Amazon is that there's no one part of a market where they're the dominant player per se. I mean, you would have to define the market by incremental growth of e-commerce. E-commerce is still a low double-digit, mid-teens percentage of consumer retail in America and a lower percentage of that globally. So
yeah, I remember when Walmart, maybe they still are, but when they first started becoming 10% of all U.S. retail sales, I mean, that was not enough to draw regulators in to say that this is a monopoly.
And I think that's where we land right now. We'll have to watch that. D.C. can always shift definitions on us, and we'll have to address that. But as we see it right now, I think that's more noise than reality.